Welcome back to Investing and Trading Live, sponsored by TradingAcademy.com. And if you are a first-time listener, we are thanks for having come back to this great show. We've had an awesome show on the markets and how they function for one, but different characteristics that you need in consistent trading and investing strategies. My name is Josh Lilquist, and in the last segment we did that, and we had a lot of people texting in. Congratulations to those people that did text in for that free investing class that we do locally here at the Academy. Simply just text the word investing to the number 210, and that's for 2 seats, or simply go to investwithota.com, and that's for a free investing class to learn about these techniques and concepts that we're covering here on the show. Make sure to subscribe and like the podcast wherever you listen to podcasts, Apple Podcasts, iHeartRadio, and Spotify. So that being said, Al, there's a lot of, and kind of how I kicked the last segment off is there's a lot of hoopla online, a lot of hoopla on the TV, the radio waves, whatever that may be, and different things that are being spoken about. And in my mind, it's to get the public to do certain things. And you talk to people that have traded before, and if they haven't had the success that they're looking for, they say, "Oh, the market's always after me. Every time I go buy, it goes down. Every time I sell, it goes up, and it knows what I'm doing." And blah 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 blah. Right. So that being said, is the market is that actually an equal playing field for the public? Right, because you have institutional trading investing. And it's the public. And it's really just an exchange of money is all it is. And it's from the people that don't know what they're doing to the people that do. So are the markets really equal?
Yeah, that's a great point. And one of the reasons that people don't do well is because maybe it's not. Maybe it's not equal. When you look at Wall Street and the financial markets, that's $1 trillion, multi-trillion-dollar business.
Mm-hmm. Well, you look at the Forex market, that trades $5 trillion a day.
A day, right. I'm talking about the profits of these companies.
Sure.
They're going to do what they have to do to maintain, not only maintain those profits, but to grow them. So is it an equal playing field? Well, Bloomberg Business Week. Bloomberg's a pretty reliable, reputable company. They said this is a quote from Bloomberg. Most Americans today believe the stock market is rigged, and they're right. Well, beating a rigged game is easy if you know how it's rigged, and that's what we show you. How to take advantage of that knowledge, how to take advantage of what the institutions are doing, what the big pros are doing. What you'll find, even with some of the hedge fund managers, they understand they have to be able to manipulate the price of something to make it go higher for them to take out more of a profit, make it go lower so they can get in at a lower price.
A good example of that is think about this though. If the institutions are trying to buy something, they have to convince somebody else to sell it,
right.
And vice versa. If they're looking to sell something, they have to convince somebody else to buy it. And who are they trying to convince? The public. And it's easy to do that via social media,
sure.
Via University of YouTube, all that TV, all that stuff that's out there. So it's not really taking advantage of the market. It's understanding how the market actually functions.
Yeah, it makes basically what they're doing, and what you just said, they're creating illusions for people, and people follow those illusions. But here's the interesting thing. Even though the public knows the markets are rigged, they still participate, actually becoming kind of willing victims of the rigging, and that's why the majority of people fail and the riggers win. And when those guys are setting the rules, when they're setting the rules to put the odds in their favor, who do you think is going to be the non-beneficiary of their rules? And that's pretty much the public.
So how do you not fall into that trap?
Well, you don't fall into that trap because if you use a strategy, the proper strategy, that strategy is going to show you what these guys are doing, not what they're saying. So we want to make sure that that's where you cut out that noise. That's the fluff that you cut out. That's what I mentioned in that first segment. Charlie Munger became successful because he was able to look beyond the noise and all of the commentary that's out there and just concentrate on what's factual. And that's what we do. We want to keep this simple. And the simple truth is that all you need to know is when is the time to buy and when is the time to sell. And that information is available to us on a price chart provided by these big institutions. They're showing us what they're doing. They're tipping their hand, so to speak. And unless you know how to identify where that is, what they're telling us, then you're just basically going to be guessing and hoping that things work out. Our core strategy was put together by guys that worked on Wall Street, that understands what moves the market, what moves price. And let's be honest, the important thing, if you make an investment or a trade, is the price movement. If you buy something, you have to have the price go up in order for you to benefit. What causes it to go up? It's institutional activity that starts that big movement. And here's the other thing. Human beings are emotional people. We react with emotions, and Wall Street understands that, and they take advantage of our emotions. They may start a trend, they may start an upward movement or downward movement in something, but then the public jumps in and they take it to extremes. That's exactly what Wall Street wants to have happen, and what it creates is a situation where people do the opposite of what they know they should do. Instead of buying low, they end up buying high. It's that fear of missing out. When you see a market move, people have a tendency to get in right near the peak just before it's ready to roll over.
People are probably driving in their car right now, Al, and looking at their spouse and saying, "You do that." They say, "I know, I do. So do you."
Yeah. And then they do the opposite when they sell. They're supposed to sell high, but they don't know where that point is. They can't identify that, so they hold on. And then finally, the emotional or fear takes over, and they end up selling low. It's exactly the opposite of what you should do. And that's interesting what you just said, where somebody's driving in the car and they maybe look at their spouse. You know, the worst words that we can hear as a male is, "Honey, we need to talk." What makes it even worse is when it's, "Honey, we need to talk about our finances."
Yeah.
That's a subject that most guys don't want to hear. Well, how would you like that subject to be a positive one and not a negative one? And to be able to do that, you have to understand what the benefits, what the opportunities are in the market, and then more importantly, how to take advantage of them. Identify what they are, and you take advantage of them by following the people that are providing those opportunities in the first place. That's Wall Street. You know, there's a number of traps out there that people fall into, Josh. One is a trading trap, where people are taught to follow certain things, certain strategies that might have been built by Wall Street. And Wall Street understands, you can go to Barnes & Noble or the library, you'll find hundreds of books on different strategies. Wall Street knows exactly what all of those strategies are, and they know exactly how the public is going to react to them. So instead of doing something that Wall Street can react to, we want to do something based on what Wall Street is doing. We want to react based on what Wall Street does, not
Correct.
what those illusions or those manipulations that may be present are providing for us.
Yeah, and what you're really talking about is, as you mentioned right at the beginning of that set there, was a strategy that shows you that. And then where you find all that is on a price chart, because that's telling you where institutional order flow could be buying or selling. And that's what we want to identify, and that's supply and demand as its finest. We haven't even talked about supply and demand here today. Maybe we'll mention that a little bit in the next segment, so stay tuned for the supply and demand conversation on the next segment. But you have to be able to learn it. You mentioned earlier in the last segment, and you have to be able to follow the institutions, but you mentioned you have to be coachable, willing to learn. You've been mentioning a little bit about Charlie Munger here today, and 99 years old. You said 1 month from 100?
1 month away from being 100.
Yeah, 99 years old, and historically one of the best investors, but partnered with Warren Buffett. And a lot of people think, well, Warren Buffett's just a self-made guy. Well, he didn't learn by himself. He had a mentor. He learned from Benjamin Graham.
Right.
They met at Columbia, but I don't even know what year it was, but it was probably many, many years ago. So he had a mentor. He had somebody guide him on what to do. And finally, he went to work for him, I believe it was, and then took some investment money, and then finally started Berkshire Hathaway several years after that. But that's the thing, is you got to have to be coachable to learn something, but you had to find the coaches. You got to find someone to teach you, find somebody that has been in the market for more than 2 months, 2 years, probably 25 years, 26 years, Trading Academy has been around for over 26 years, teaching people the skills, just like you, the skills on how to trade, how to invest, how to get started if you're brand new, or how to have strategies for more consistency if you've been trading and investing for many, many years. And it starts with a free investing class. These investing classes, Al teaches these every week. I teach these as well. And we have them across the metro, but we have a state-of-the-art facility here in Bloomington, a few different classrooms where we have these classes. We have them on the weekends, but also the weekdays and evenings. So to come into one of these investing classes to learn and look for a coach or look for the strategies that the institutions are doing, you can simply just text the word investing to the number 210, and that's for 2 seats. Text investing to the number 210 right now for 2 seats for that class, or simply just go to investwithota.com. That's investwithota.com. Al, real quick, I want you to give me the topic for the next segment.
Well, let's talk a little bit about retirement and why there is such a crisis in this country.
Let's do that. Retirement coming up next. Stay tuned. This is Josh and Al investing and trading live. We will be right back.